everybody, and welcome back. Today, my guest is David Smith. David is a head of corporate governance at Aberdeen Standard Investments. Welcome, David.
Hi, thanks for having me.
David, today we want to discuss the role of ESG in Asia investing. And you recently launched a new Asia equity ESG strategy. So why now, and how exactly does this strategy look like?
Well, first of all, thanks for having me here. It's a real pleasure to be able to talk about our strategy with you and your viewers. The world is in a really interesting but uncertain place at the moment, with a number of big challenges and themes at hand around the transition to the low carbon economy, for example, and all that entails around transition to low carbon energy system, low carbon industry, low carbon transportation, for example. We see the UN SDGs come into force in January 2016. And we see clients increasingly interested in investing for impact and investing for positive social and environmental change. And it's against this backdrop that we developed a new Asia Sustainable Development Fund, investing in companies in this region who are providing products or services aligned with solving these UN SDGs.
What are the drivers for an increasing importance of ESG factors in investing in Asia currently?
Well, we've long seen Asia as a very interesting, very exciting region, and a region where you need to manage your ESG risks whilst looking to invest in companies that are operating in a high growth, exciting region. What we're seeing now is governments around the region increasingly focus on these kind of themes and challenges that I mentioned around providing access to healthcare, around ensuring financial inclusion, and around promoting policies to ensure green development. So we've seen Green China themes, for example. We're seeing societies increasingly push around issues like this. So sustainable development, circular economy, push towards renewable energy as part of this mix. And we're seeing companies respond as a result. And we think that this confluence of factors is driving even more interest and even more importance for ESG factors around Asia.
What is the relevance and awareness of the Sustainable Development Goals in Asia if you compare it to Europe? And is there still potential?
Yeah, it's a really great question, because when we think of the UN SDGs and the applicability of the SDGs and the kind of themes and issues that they address, these are issues that have particular relevance in and resonance in markets like Asia and emerging markets. So issues around water and sanitation, access to healthcare, access to financial services, for example, are keenly felt in Asia. And this is a region that really needs capital to be mobilized in order to solve these problems. We've seen a lot of global funds be developed and launched that are looking to invest in UN SDGs. But we think that our fund is the first fund to invest on a regional basis in Asia, where we think this capital is really needed in order to solve these problems.
Is there any evidence that including ESG factors help increase yield or reduce the risk in a portfolio over a longer term?
Yeah, there's a ton of research around the improvement to financial performance, both in terms of a company's operations and stock price returns over the long term for including ESG factors. So it's intuitive, I think, that companies that better manage their risk, better understand these big drivers of change in the environment in which they operate, should do better over the long term. And the research would tend to back that up and support that, both in terms of improved performance and low volatility, for example, in these stock price returns. I think what's really interesting is, rather than looking back at the correlation or the outperformance of ESG factors with indexes, if we look forward and think to ourselves, what will drive both operations and stock price returns of companies over the next 10, 15 years, it's really looking at these big trends that we're seeing around the world. And I've talked about them before, but access to healthcare, access to financial services, improving the reuse and recycling of materials, and the greater penetration of renewable and sustainable energy, for example, and all that entails. We think that companies are aligned with these products and services that are helping to make the world a better place will outperform over the next 10 to 15 years. So yes, there's evidence on a backward-looking basis, but also on a forward-looking basis. We think there's great opportunity around these companies that are offering products or services aligned with the UN SDGs.
So what factors do you incorporate in your investment decisions? And how about data quality and availability of ESG data in Asia?
Yeah, this is a really great question. It's a really important question when we think about the construction of our fund. Because if you look at the availability of ESG data around the world, of course, it's better in some regions than others. And we can see you get pretty good data in some parts of Europe, you get reasonably good data in some parts of North America. But Asia and emerging markets, for example, are regions that have lagged a little bit on ESG disclosure. And when you look at UN SDG type disclosure, that difference is even more marked. So you see a different level of disclosure in Asia than you do in developed markets in Europe and the US, for example. And what that means is if you just rely on disclosure, sit at your computer and read out your reports, then you're going to be challenged in terms of finding companies that are providing products or solutions aligned with solving the UN SDGs. So what we've been able to do is take advantage of our equity research footprint across Asia, look at the companies we own, look at the companies around this region, and really try and understand how their businesses are aligned with solving the UN SDGs. So we start with the companies that we cover, we start with the buy list, we then do additional research on these companies, looking to understand their SDG alignment, mapping that to the issues in their home markets or regions or global issues that I discussed earlier. And then from there, narrow that down to a universe of companies where we feel there's very strong SDG alignment. And from there, we construct a portfolio in order to, we hope, achieve outperformance of our fund. So the challenge for us is that the data is less well disclosed in Asia than other regions, but we think that also gives us an opportunity as well. So part of what we're doing with this fund is engaging with these companies, not only to improve their alignment with the UN SDGs, but also to improve their disclosure with the UN SDGs. And we think that that improvement in disclosure will make them more visible to and potentially more attractive to global investors looking to allocate capital to Asia and Asian companies operating businesses and services aligned with solving the UN SDGs.
So China particularly does not score very well in ESG ratings due to some governance issues. So where is your portfolio currently located and what regions do you invest?
Yeah, it's a great question. It's a great issue for China as well. China is an interesting country, one with huge potential in terms of the economic growth and a large number of really quite good companies, but also a large number of companies that perhaps wouldn't meet our criteria for investing, this minimum quality hurdle that we have for investing. What we've been able to do is take advantage of and work with our research team that looks specifically at Chinese companies, draw on our experience of these Chinese companies, understand their quality and really understand their business to invest in companies that are aligned with solving these SDGs. The challenge with Chinese companies is that disclosure of some issues around ESG is not where perhaps as investors would want it to be. And that's not just on SDGs, that's on basic ESG issues as well. So a lot of what we've been doing over the last 5-7 years, for example, that we've been working quite intensely with our Chinese portfolio companies is both encourage them to improve their disclosure around ESG issues, but also work with them to provide them information and some comparisons around the type of things that their peers, both in Asia and globally, are disclosing as well. And we think that will help be more visible to global investors looking to invest in China. But the information asymmetry around ESG in China is very marked, as you were saying. We still have a decent allocation to China. So we have about 30% of the fund in China. We have about 15% of the fund in India, for example. Because of the benchmark, that means that we're underweight China and overweight India, but we do have a decent allocation to China on an absolute basis.
So this was David Smith from Aberdeen Standard Investments. Thank you very much, David, for being here today with us and sharing your views.
My pleasure. Thanks for having me.